So the Bank of Canada cut its rate finally after 3 months of waiting. And now what are buyers thinking? Everybody thinks the market's going to explode. But what this could really mean is that your purchasing power went up by $62 per month. So let's take a look. Today, we're going to go through all of that, what that means for you as a buyer and a seller going into the end of 2025 and heading into 2026. Now, previously, the bank was hesitant to let people borrow more money. Now it looks like there's a little bit of a release valve, and we're going to go into that right now. So, as of August 1st, 2025, the Ottawa real estate market exhibits the following key metrics. So, approximately 3.1 months of inventory, which indicates a balanced market. We are trending towards a little bit of a higher number right now, but I see that dipping much lower towards the end of November and December. Single family homes, they're up. Just like I've been saying, if you've been watching the past few videos, is that the single family home market, especially in the city core, is quite different compared to, suburban homes. We are seeing suburban homes, in Stittsville, Orleans, Creek, Riverside South. Those homes aren't selling as quickly if they aren't priced to the market. But in the city, if you have a nice home and you put it up for sale at a good price, the chances of it selling quickly or even over asking is quite high. And we've seen that with the average price around $839,000, reflecting a 4.1% increase year over year. Now, townhouses. This one is very tricky. Townhouses have been hit or miss throughout the year. Now, they say that the average price is approximately $555,000, making it an increase of 8.3% compared to the previous year. But what's happening is some of those higher end townhomes are actually dropping in price, and one of those lower ends are actually going up in price. So what's happening is that the market is kind of raising the overall average, but it's very selective. So I always talk about micro market and macro market. So those are two different things, right? The macro market is Ottawa in general as a whole. The micro market would be something like Riverside South, Finley Creek, Orleans, these different things where those certain micro markets have certain different price point thresholds, right? So if you're looking at freehold homes and units in Riverside South, you're probably not seeing any between 650 and 600. You're not seeing any good ones. Maybe you're seeing them, the really nice ones go between 650 to 750. Whereas in different neighborhoods, it's going to be, between 600. But we're also seeing some of the older townhomes go for less, the ones that need work. So this has been a pretty hot topic throughout the years, is people want move-in ready. Not many people want something like a fixer-upper where they can put in some work and get some of that sweat equity, pardon me. What we're seeing is the homes that are move-in ready, well-staged, clean, painted, done up, they're selling quick and for good values. But those homes that need a little bit of tender loving care, they are going for much lesser value. So that's where I'm finding that the average price point is going up, because more of those move-in ready homes are selling, and the ones that aren't move-in ready and need a bit of TLC are sitting on the market longer and going slower. Now, condos, average price near 444,000, slight decrease of 3.6. Sales volume in August, and I think we haven't gotten the September numbers, but it's going to be, I think, a little bit higher than that in September. In August, 6.6% increase up from the previous year. So we did see a boost in August, not as much as the rest of the year. Typically May, June are the peaks of the year, but this August was quite busy, especially compared to the rest of the year. Now, this one's pretty huge. Pre-pandemic comparison sales. So we remain 14% below pre-pandemic levels. So what does that mean? Does that mean that it's a huge chunk less selling on the market? Technically, yes. Like, there's less selling, right? But it doesn't feel like it's a lot. The way it feels like it's a lot is when you tie in the fact that we have way more inventory, right? If we have 3.1 months of inventory and 14% less homes, that's a huge chunk, right? Homes increasing and less sales, you have a massive gap of listings just sitting there. Whereas in pandemic, it was, 2 inventory and sales were up 15%, right? So that is a huge difference. Now, this one is, what's happening? Buyer surge. Our brokerage has identified a significant uptick in buyer activity, with showing requests increasing by 22% over a single weekend following the rate cut. So that is actually something very, very real. I have seen, news was going to have an increase in more activity. Mean that whenever a rate cut hits, people just make a magic switch and say, all right, time to go shopping for homes. It really takes a couple months. I always say after every rate cut, you don't see the results of it until 3 months later, which is something that it's been standard, right? Like when people rate cuts, they say, okay, maybe I should start thinking about it. Maybe I should start working on my pre-approval. That doesn't mean those things happen overnight. They take probably 1, 2, 3, 4, 5, 6 weeks before people even start going out to see homes, going to open houses. But you can tell people we're anticipating for the September market, and we're anticipating this rate cut, especially since we had a busy August, we had a busy September, and we saw showing rates go up by 22%, which is huge. Like, we have listings that were sitting that weren't getting much action, and now they're all coming in sales. So all these people that were, frustrated the market was doing, well, now the buyer surge is back. People are looking at properties. So you really have, from December to make this count. And if you're going to make something work, it has to be between now and really November, because December is holidays, right? So are you going to get much action during then? Probably not. So if you're looking to sell, the buyers are out there right now. You want to focus on the current market and not hope for the best down the road. So my 90-day playbook to end of the year. So if you're a buyer, pre-approval. I have been beating this thing like a dead horse, and it's time to really hone in on it, because the pre-approval is super important, especially with what the rates are now. The banks are advertising higher rates than what you can actually get. So you're actually able to negotiate now with your rates. And guess what? The other thing too is you can actually negotiate on your homes. So there is more inventory, there is more availability of homes. You can negotiate closings, you can negotiate items, you can negotiate inclusions, you can negotiate prices. The other thing too is you can negotiate your rate. Shop around, take a look around what the banks have, because what the big banks, like I saw something that where the big banks you're typically offering advertised rates as 4.5, 4.6, but you can actually get 4.1, 4.04, 3.9, depending on your qualifications. So don't just look for a pre-qualification, get that pre-approval, because that is going to be super important in you landing the home that you want. Because sometimes having the pre-approval, showing it to the seller, is going to give them confidence in your offer and going to make them want to actually work with you. Target properties. Focus on, what do you focus? Do you want to be focusing on townhomes? What's your budget like? Are you looking at singles? If you're looking at singles in the city core, you want to be super hyper focused on what's happening on a day-to-day basis and on a weekly basis. Your agent should be showing you homes that are selling and that are coming on them right away, because you don't know what's going to happen with those inner city listings, because they can tend to go very quickly. And if you miss one by a day or two, it could be the difference between $100,000 depending on the type of property you're buying. If you're looking at townhomes, you good selection. So go grab 10 properties you like in a certain area, focus on them, go see them, take a weekend, go see them. One thing you want to avoid is not looking at them at night. So if you're busy during the week, during the day, and you want to go at 6, 7, 8 p.m., you're not going to be getting much info on the property, especially the exterior, because you're going to be missing out on a lot. And then a lot of surprises could be coming if you go on a home inspection and you find a whole bunch of stuff wrong with it on the exterior that you could have avoided altogether. Offer timing. This one's a bit of a quirky one. I'm not sure how many people are going to agree with me on this, but something I've considered telling a lot of my buyers is consider submitting offers midweek to avoid competition from weekend bidders or weekend buyers, right? So instead of, people like the previous thing I just said, if your home's on the weekend, so if somebody's looking at a home on the weekend, they're probably making an offer on the Saturday, Sunday, right? If you're seeing homes on the weekend and there's no offers coming in, maybe make an offer on a Tuesday afternoon, see what happens. Because if you make an aggressive offer, depending on your irrevocability on your offer, it's going to make the difference between somebody being able to jump out and go see it that was planning to see it, or you just getting the offer to work right away. So those are a few things. For sellers, this one is going to be very interesting, because townhomes under 600K now is an optimal time to list given current demand. A lot of townhomes are sitting there overpriced. They missed the mark from the beginning and they haven't adjusted. For you to come in right now and be a well-priced townhome, well-kept, well-appointed, potentially staged, or at least decluttered, and all the touch-ups done, this is the perfect time for you to hit the market, get the right sale, and move on and go on to your bigger home, or you're downsizing your home, whatever it is you want, right? Detached homes over 900,000. So this is going to mainly factor into the suburbs. Price competitively. You want to be within 2% of the recent comparable sales to attract offers. If you're 5 to 10% over the last sale, it's going to be crickets at your property. You're not going to get a showing. People are going to know. They don't care to negotiate. The price sensitivity is so tight right now. We had a situation just last week. We had a home listed for 715. We dropped it to 700. We weren't getting showings at 715. We dropped it to 700. And all of a sudden, within a 3-day span, we had 7 showings in, and we had 2 offers come in after those 3 days. And we sold the home for 715. So that obviously isn't going to be the norm, but it just shows you this: the price sensitivity is so tight that buyers know the difference between them getting a home and them just wasting their time in a home that maybe is not attainable. Condo owners, this one you want to reevaluate where you're at. So do you want to be sitting on the market again? Do you, given the supply, we do have a good amount of supply of condos. Some buildings don't, but especially the condos, that's directed to the lower end condos, like those 1 bedrooms, 1 bathrooms, 2 bathroom, anything below 6 square feet. There is just so much to choose from. Think about it twice before you hit the market, because you want to evaluate the market conditions first, see how much supply there is. Is it worth it to rent it out for a year and wait it out a bit? Maybe get a good tenant in there that's going to pay the mortgage for a little bit, or rent it out for the next 2 to 3 years and see what happens. That's the biggest thing with condos. The upper echelon condos, like the higher upscale ones, they are moving. It just depends on what it is and what the building amenities are. I mean, again, really, there's so much inventory that buyers have so much choice, and the confused mind does nothing, right? So because there's so many condos, I think people are getting analysis paralysis, and they need to be evaluating more. Whereas, if you hold on to it, you might be okay for another year or another 2 years and see what happens then. But again, this is not advice. This is just my opinion. And my opinion could be that, maybe in years the prices of condos are even lower. But if you have rented it, at least you've paid some of it down, not using your own money. So that's one of those factors that you can use it as that. If you want to sell it, you have to be priced competitively. Simple as that. There is so many condos out there, and if you're going to hit the market, make sure it shows well, make sure it's easy to access, and get those showings in there. And this one, you probably want to be 2% below the recent comparable sales, because every other condo, you don't know what it's selling for. Now, while the real estate market in Ottawa is showing signs of renewed activity, several factors could also influence our trajectory. So economic uncertainty, potential federal job cuts, or unexpected inflation spikes could impact stability. So this one, we are known as a government town, right? That's been our calling card for years. And this one, I think, is very interesting because we don't know what's going to happen, right? How many jobs are going to be lost from the federal job cuts, and how much instability is that going to cause? That's the golden question, right? Because typically Ottawa's market has always been more stable than Toronto and Vancouver, whereas now we're feeling some shifts, right? And with these job cuts, it could swing either way. We'll see. If there is too many, it'll have to be something that everybody evaluates, and I think we'll start seeing less buyers. But if things go well, maybe jobs don't get cut, and maybe there is more buyer activity. These are all things that could or could not happen. But I still think Ottawa is still very stable. Is it as stable as it once was? Probably not. Supply dynamics: approximately 3,400 new housing units are projected to enter the market by the end of the year, primarily in the downtown condo sector. This influx may continue to rise, leading to I can't even read that word, but anyways, it's a mix, right? So I think we have lots of builds, lots of rental units coming up. There's a lot of condos and rental style buildings coming up. So these are things that are going to affect rents for landlords, affect purchasing, affect just overall market. And the other thing too is we don't know what's going to happen with the global economy, right? So last year, everybody was saying that 2025 is going to be the year where everything goes well. Homes are going to be good, prices are going to be good. But what happened? We got hit with tariffs, and just like that, the whole year shifted. So be on the lookout. We don't know what's going to happen. Also more rate cuts. Are there going to be more? To be determined. But I think right now, if you're buying or selling, it's a good position because there's a good amount of buyers. There's a good amount of inventory. Most buyers and sellers can come to a good agreement and make a deal happen if it's the right home priced at the right price. In conclusion, Ottawa's housing market is transitioning from a balanced to a more competitive phase. Buyers and sellers should stay informed and be prepared to navigate the evolving landscape. So for personalized strategies or just overall market insights, feel free to comment below or book a call with me and I will be there to meet you. Thank you so much, and I'll see you in the next video. All right, that's video 1. Thank you, Jeremy.